All right. So today we're gonna be going over price, and I'm gonna tell you exactly why I think that the stock market and everything is gonna crash the next couple of days, or at least the next week. Um, and then later in the video, I'm gonna go over my funded accounts, P&L, and things that I've looked at. Looked at the stats of on like my P&L calendar and stuff like that. And run you through those, and then I'm gonna tell you what I think I need to do differently, and then things I need to do better. So let's get into that. So going into the daily time frame on both ES and Nasdaq, um, we got all-time highs right now. Basically, all-time highs on both the charts. ES is at all-time highs, and Nasdaq is just right below them. So going out to the daily on both charts, going to the all-time highs, seeing ES is at all-time highs, Nasdaq as basically at all-time highs. So we have an SMT, large time from a daily SMT we have. So this daily SMT plus we have this inverse or value gap here, this daily inverse. So with my model, the inevitable model, which is kind of like the forever model, but it's a little different. It's more specific. This is a good example actually. So the inevitable model is the SMT, breaker structure, CSD, and then retracement into the inverse fair value gap that was created with the SMT move. So CSD retracement back to this specific fair value gap, and then fair value or stop loss at the lows, and then takes profit, goes the other direction, rallies. So same setup. SMT. Um, That's the only thing, is that there's no CASD before their projection off. Technically, there's SMT here as well. So technically, we did have a break structure to the downside. SMT break structure to the downside. I'm pretty sure there's one right here too as well. So SMT break structure, retracing back up. It's this inverse fair value gap. Make it purple. So I'm seeing this is actually Friday's price action. I'm seeing this. So if we go to 4 hour, it makes it very obvious that we are respecting this inverse, really where it was like laid at. But I'm looking at something like this. Entry here, stop loss high. Technically for this trade, it would be here at the high of the inverse fair value gap. Um, and then I'm trying to see all of these lows get taken out. These lows right here are so relatively lows like that they need to be taken out. These are not we're not gonna go any higher without taking out these lows. And these are pretty relatively like low lows, like 23,000, and right now we're at 23,600, 700. So that's another 700 point drop before I think we're gonna rally higher. We have this relatively low, these are two relatively lows by themselves, and then we have this one that are barely taken out, and I wouldn't call this a sweep. And then there's also this one right here. So it's like all of these are gonna get taken out. And if these are getting taken out, possibly this one could get taken out, and all these as well. If you go back to the daily time frame, actually the weekly time frame, we have this fair value gap down here, this one right here, and we also have this one right here, which is the double fair value gap sequence. So what I'm trying to see is price. This is right here is a stretch because price could obviously not come down here. This is a lot. This is a lot farther than I said. This is about 1,000 points, which is still possible. Definitely still possible. Um, so yeah. So we also have the monthly time frame double for like so I'm expecting price to retrace back in here. So technically, we could definitely see all of these lows get taken out. All of these lows can be taken out, and it's a high time frame setup. So with my experience, high time frame setups when they happen, the low time frame um, tends to have an entry as well. and that's exactly what happened on Friday. And this low time frame entry, normally like dumps or like pumps, like it will move in a long direction because it is a higher time frame setup. So on Monday, right, or on Friday, let me show you this on the top step. You go to Friday's price action. This is literally my trade. S&P breaking structure retracement into this fair value gap right here. And this fair value gap is at 953 on Friday. 953 on Friday. So right here. So my entry was even better than that shit right here. And if you want to do that as well, you don't even need to put a stop loss up here because this is the lower time frame entry in the higher time frame entry. So there was S&T here, yeah, with this high. So technically it only needs to be here. And technically it only needs to be here because I use the top of the fair value gap, but we'll do S&T high. So going to the chart with this right now, we're at a 39 to 1 risk reward and a total of 750 points, which is insane. So that's why I think the market is going to dump for next week. And I just ran you through my trade. Like realistically, price is going to come up here, and this double fair value gap sequence possibly take out midnight open and Asia. Stay in this. I wanted to see it stay in this fair value gap, and then continue lower. And if it's possible, if that doesn't happen, price is just going to dump next week because SSD is still here. We might take out like this high or a relative equal high, something like this, maybe 0 ounce on the daily, whatever. My point is, price is going to dump, take out these relative equal lows, possibly take out these relative equal lows, and then go into this fair value gap. And then that's when we would actually see the real move higher that everyone has been talking about. Everyone's been fantasizing about. Everyone wants to see this massive bull run. I think we still have a week or two to go. Maybe 3. We could call it a month if we need to. It depends on how the chart wants to move and how it wants to look. And honestly, I would love to see it come down here because this is a healthy retracement. This would give me like a way better optimal position entry or like long time if I wanted to enter anything. And yeah, same goes. This is the Nasdaq. So this is all the stocks. So the same goes also for crypto. It's a little different, but I'm not gonna go over that in this video. But Bitcoin is also has a market maker sell model on it. So that's that. Let's go over to my top step. I just want to go over it quick. Just talk about some things I noticed on here and some things I want to just share with y'all. Just like what I want to change. So basically, total P&L on my main account, I'm only down 111, and then 38% win rate. And average loss. This right here is what I want to go over. My average win is only $224, and then my average loss is $147. But with my model that I've been trying to like trade and like the strategy that I've been trying to like promote is trading $500 every day, right? And that's not just because of the views or anything on social media. It just makes more sense to me. Risk $500 a day. I'm either losing $500 a day or I'm making 1,000 or like 1,000 plus. And $500 isn't that much, especially on these 50Ks. I can risk $500 4 times without making any money. So I'm just winning or losing consistently 40 different times. Um, so that's really it. I just want to get my my either like literally I just want these numbers to be double or triple or like about double. Like this should be 1,000 or like this should be the average trade right here. This is me probably risking $500. And this is what I want to see more too. More trades like this. And more trades like this. Um yeah, that's the P&L for the month. P&L for last month. I've just been trying to make back this day. the 21st, and I took 3 trades, and they're all like very high risk trades. Um, yeah, that should just set me back. Honestly, I was up pretty good. Like this is the beginning of the challenge. I was up $600, and I just kind of had a few bad weeks, and now we're at where we're at for that reason. Um, if y'all want to, I'm just gonna put this in here if y'all want to look at it. These are like my trades and the reasoning behind it. Put these in here for if y'all want to just pause the video and watch it. But that's this week's. That's all. This is this week's price action. Um, we'll be posting again Monday to Friday. Every morning. I'm gonna be trading like every day now because I missed. Oh, that's also one thing I want to show you is that this week I only traded 2 days, and I missed 3 different days for different reasons. This is the day before NFP, and this is Labor Day, and I just didn't trade Tuesday. I think I was very busy Tuesday, so I didn't trade. And then you see it happen these days. So just need to trade every day, risk $500 every day, and just be more consistent. I only want to take one trade a day. Like if I'm risking $500 a day, I only want to take one trade a day because that means it's either gonna be a banger or I'm losing $500, and I need to be okay with that and just be okay with the risk. Um, videos every Monday to Friday. Uh, that's about it. That's why. So basically, summing up this video, Nasdaq and ES are setting up for priming shorts. They're priming shorts right now. Enter this fair value gap, and we're about to dump, taking all these lows. So everyone who's watching this, get ready for a dump. Um, I mean, if you have a different idea, I'd love to hear it actually. But I mean, to me, it's pretty obvious, and we just swept this high, took out these highs, rejected, filled this, started coming lower. We're about to take out all these lows on ES as well, all these lows, possibly these lows. Maybe make an S&T with these lows. That'd be actually crazy, and we will start pumping after that. Um, y'all are still watching this. I appreciate that. It's my first YouTube video. Well, technically, I made another YouTube video like last week, but I was like, I don't even need to post it. No reason to post it. I just didn't. It wasn't like great content either, so it's whatever. But I'll see y'all on Monday tomorrow, bright and early. Uh, take it easy.